Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the market ending week of November the 4th, 2022. Let's get into stocks. Equities were down across the major U.S. indices with the S&P down 3.31, the Russell 2000 was down 253, and the NASDAQ was down 5.62% after the Federal Reserve increased interest rates and failed to point toward less aggressive rate hikes going forward. Now, overseas, both international developed markets, which is the EFA, and the emerging markets indices reported gains, rising 1.25 and 4.68% respectively. Now, energy and materials were the best performing sectors in the U.S., while communication services and technologies reported the largest declines. Value outperformed growth. Let's talk about fixed income. As expected, the Federal Reserve hiked its federal funds rates by 75 basis points, which is 0.75%, from 3.75 to 4%, to hit a range of 3.75 to 4%, but also attach caveats around the pace of future rate increases. Among other factors, the Fed stated that it now is now appropriate to take into account the cumulative tightening of monetary policy in considering the pace of future increases, their effort to bring down the rate of inflation to their 2% long-term goal. The benchmark 10-year Treasury closed with a 4.17% yield, up 15 basis points for the week. Let's go commodities. Oil prices rose 5.36% for the week after a surprise dip in U.S. inventories. Why is there a surprise? And speculation that China might ease its strict COVID policies, driving global demand higher, which of course, as we know, should not be the case, but it is what it is. The price of West Texas crude oil closed the week at $92.61 per barrel. In economic data, the growth in the U.S. manufacturing activity continued to decelerate in October as the index declined to 50.2 from 50.9 in September and 53 at mid-year. Any reading over 50 still indicates growth, but as you see, it's just over 50 now. So remember we talk about, are we in a recession? Is it coming? Yeah, it's very evident. The softening is coming. New order rates have also been softening over the previous 5 months, and the recent report reflects companies' preparations for potential growth, lower demand. Growth in the U.S. service activity also decelerated in October as the index registered 54.4, down from 56.7 in September. Again, any reading over 50 still indicates growth. New orders dropped 4.1 points after 5 consecutive months of decreases. The price index rose 2 points, indicating further pressure on inflation. Our employment rose by 261,000 jobs in October, ahead of the consensus estimate of 210,000, with notable gains in healthcare services and manufacturing. The unemployment rate returned to the 3.7% mark after bouncing in the past 3.5 to 3.7 range over the past several months. All right, let's get into some company news. ConocoPhillips, of course, Select and Energy Select Holding reported better than expected revenues and earnings per share, up 86 and 99% respectively on a year-over-year basis. The board also boosted their share buyback program by $20 billion to $45 billion and raised their dividends by 11%. Shares rose 4.5%, 0.05%. How about Fidelity National Information Services, which is a G50 holding, reported a slight miss in last quarter's revenue and earnings. Management's guidance for the coming quarter, however, was significantly below consensus estimates for organic growth, margins, and significant foreign exchange headwinds. Shares dropped 29.13% for the week. And SAIA, which is a G33 holding, announced quarterly revenues and earnings that beat expectations. Shares of a leading transportation provider of less than truckload services rose 9.3% for the week. That includes this week's market update. We thank you so much for being part of our ARA family. To contact us, of course, call us at 855-756-5700. Visit our website, aradvisorsinc.com. Of course, if you have the Generational Vault, you can also log in there and say, hey, I need to talk to you. That's fine. Don't forget to visit us on Facebook and YouTube and share it to get our newsletter. Hope you have a great week. God bless you. We'll see you again next week.